Welcome back to TV5 News at 9. It's time now for Aging in Style with Vitale Wealth Management. Joining us now is President and owner Joe Vitale. Thanks for being
You're
here.
welcome. Good morning, Lauren.
Good morning. So before we begin, don't forget to check out Joe's newsletter, Financial Vitals, for all the latest news and market trends. Just scan the QR code on your screen to gain access. Now on to today's topic. What should we expect from the rest of 2025? We've got a lot to dive into here. First, Joe, you talk a lot about staying the course. How do we know that with nagging macro uncertainty and market volatility likely to continue, do you see any optimism with waiting and seeing? What does that look like?
Well, I think I see a lot of optimism, especially in the macroeconomic approach, because a lot of times people look at the micro, they look at just, oh my gosh, the market's down a little bit today, or look at what's happening today, or what do we do? The macro approach, when you look at the broad scale of what's happening with the tax laws that are coming, with making them permanent or extending them, that's going to do so much. I'm very optimistic this year. I think it's going to be a good year. I think it's good that everybody, yes, stays the course and don't. We've seen the knee-jerk reactions, right? We saw what happened on Liberation Day when all of a sudden the market dropped, and not everybody, but all of our retirement clients. I had very little who actually called and was very nervous because they know to stay the course. They know that this is just a blip, and sure enough, it corrected itself in a month. So it is, yes. I see a lot of positivity and optimism. We just have to take it a little bit at a time.
Just be patient, just wait and see.
Just take it easy, yes, yes.
And to defend against increasing economic uncertainty and the ever-changing global trade, we may consider rethinking things like geographic diversification, focusing on quality stocks, positioning for secular tailwinds, and broadening AI adoption and greater defense spending. Now, not everyone may know what these things mean. Why are these so important, though, to consider, and how can we deal with economic uncertainty right now? Do you mind breaking that down for us?
Yeah, you really don't want to miss the boat on a lot of this. So a lot of times people are like, oh, the AI, I'm a little concerned. You have to jump on the AI bubble. Remember, a lot of times 25 years ago we had the dot-com bust when everything was so new. But AI is the wave. A lot of people, you have to have that part of the portfolio. It doesn't mean you go all in and that's everything you have, but you have to have some diversification in artificial intelligence. You have blockchain and Bitcoin. That's very scary. You can have a little bit of that. There's other things that, you look at what's happening all over. We look at international. International is starting to come back in, where a lot of times international has been such a laggard that we haven't really gone into it. But it's nice to have some exposure. But being part of good quality companies is really important, especially when you're unsure. We don't, especially our clients, majority are in retirement, we don't want to be speculative. We want to have good quality companies that pay good dividends, that have been around for a long time, that really lessens the risk and really can increase the peace of mind and performance over time.
And we also had focusing on quality stocks in here. I feel like that's always important, no matter what.
It is, and that's where a lot, but you got to be careful with that too, right? Because when you look at back years ago in 08, when General Motors and Kmart were big quality company stocks, they were big, and they lost everything and they reissued. So quality stocks are very important, but also you never put all your eggs in one basket. You diversify. Like a lot of our portfolios have 50 to 80 good quality stocks, and we rebalance. It's important that the buy and hold strategy, although works, you want to make sure that we go actively manage portfolios. A lot of our portfolios are actively managed, rebalanced every quarter. So if we see that happening, we're not going to ride that stock all the way down.
And how can people seek stability in rate and credit markets?
It's a big thing. You're seeing a lot of times right now with the credit and the bond, the short-term bond durations and the long-term. We do a lot of our portfolios right now. We're looking at the shorter durations, the shorter maturities are going to help, but interest rates are always changing. So that's changing a lot of things with the broad markets. It's changing a lot of things with the bond markets. And everybody's like, well, my gosh, what's happening with the interest rates? What do we do with this? You have to make sure you take advantage of it. So what we do is we shift them from one, like a stable value portfolio, which basically has the short-term treasuries and everything, and we'll go into a little bit longer and maybe a laddered approach so that we're taking it to their advantage.
And you did touch briefly already on the importance of diversification. Real quick, what does this mean? What do you mean by diversification?
Diversification, you don't go into, like, sometimes people say, well, I'm going to go everything in international. Well, that's horrible. Or everything in a domestic. Well, I actually, quite honestly, for a lot of our clients, we were a lot heavily in domestic. So all of our companies were big United States companies because the opportunity was more here. But now, diversification going into some high quality international. Maybe do we look at gold? Do we look at precious metal portfolios, what we have? Do we look at going into some tactical rotation? So there's different portfolios that offer different exposures. International, domestic, different strategies such as Bitcoin or such as AI, and are more heavily tech. And that's the diversification. Not only do you have growth, but you have value growth, you have high growth, you have, there's so many different, it can be ad nauseum where people are like, what are you talking about? It doesn't make any sense. But that's what we do. We help with the diversification.
And how can that help us build resilience?
Because no matter what happens, when you have that, you're not going to worry in the market. If you're not diversified and you're just all your eggs in one basket, you could lose everything and you're worried all the time. But like all of our clients, we say, calm down, don't worry, it's okay, just ride it out, because you can ride it out, because sure enough, it comes back right away because we're properly diversified. But if you're not properly diversified, those people in 2008 who lost it and never made it back were because they weren't properly diversified and they panicked and got out. Anybody who stayed the course made it all back and then made a lot more.
Good to know. Well, right now we are seeing that soft data conflicts with hard data.
Yes.
What exactly does this mean? How do we know what kind of data to trust?
Well, you look at those and say, well, the economic indicators and the polls say this, and our people say this. Well, that's all soft data. And everybody, oh my goodness, look at what's happening. But then the hard data actually comes back and says, this is exactly what happened, and it's contrary to what they were talking about. I don't like the soft data. You know, I like to see what's happening. Now, granted, we look at the soft data, we say, okay, is it with merit? But do you remember how many times they tell us about the unemployment report, or they tell us about, you know, the job claims and the CPI, and then they come back 3 months later and revise the numbers with hard data? So the soft data, I take it like tongue-in-cheek. I really, with a grain of salt, and I look for the hard data.
Well, looking at the past, like you mentioned, can this help us understand the current state of uncertainty? How would you describe that?
Absolutely. You have to look at the past, and you have to say, okay, what if I just stayed the course? What if I didn't respond? What if I just had my proper diversification? What would have happened? You'd be in a great position. So diversify properly. Make sure you have safe money, risk money, growth money, income money, and with proper diversification, you have no worries.
Well, these are lots of good tips to keep in mind. I hope you guys were taking notes. Joe, thank you so much again for being here.
Thank you, Laura. My pleasure.
And before we go, don't forget once again to get market updates and more through Joe's newsletter, Financial Vitals. And if you want more information on today's topic, head on over to the Aging in Style page on our website at WNEM.com.